Welcome to the Apartment Investor Show, where we help you get smart and invest smarter in multifamily real estate. I'm your host, Castillo, founder and managing principal of the Multifamily Property Group. And joining me as always is my good buddy, my co-host, Mr. Paul Peebles, national underwriter for Old Capital Lending. Paulie, how are you doing today?
JC, I'm great. Thanks for having this kind of a special podcast on what's going on with multifamily financing. So we have a lot of people on that come into this podcast and kind of talk a little bit about what they do, whether it's cost segregation or using IRAs for self-directed into this. So this is my time to kind of talk a little bit about what I do, and that's apartment financing. So we've had a couple of questions that have come on for the last, say, 30, 45 days about what the direction is for Fannie Mae and Freddie Mac, because they really have started to slow things down tremendously. So they did a couple different things. They raised interest rates significantly. Where interest rates back about a month and a half ago were up maybe 3.5%. Now they're at 4.5%, 4.75%, almost 5% in some cases. And then they've also changed underwriting too, where you were thinking about getting 2 or 3 or 4 years of interest only. Now you're getting, say, 1 year of interest only. So it's kind of changed a lot of direction for people that have been using Fannie Mae and Freddie Mac. And why that is important is because Fannie Mae and Freddie Mac, they probably do almost at 50% or greater than 50% of all the multifamily financing out there. So they're going through kind of these gyrations of questions about, can we use them for financing on multifamily property. So in the podcast today, we brought an expert on financing of apartments with Doherty Mortgage. And Doherty is a DUS lender. They're a delegated underwriter servicer. So they are the decision makers on behalf of Fannie Mae. So Fritz Waldvogel, we've had on Fritz before. So I wanted to have Fritz kind of explain a little bit about what's going on and see if there's any bright clouds at the end of this turbulent skies. So Fritz, thanks for being on the podcast. We appreciate you jumping in last moment and kind of explaining what's going on. So I'll ask the question, Fritz, what's going on?
Well, first off, thanks for having me back, Paul and JC. Always love being on your podcast. But yeah, it's been a challenging last, say, 40 to 60 days with both Fannie and Freddie pulling back significantly from where they were, like you mentioned, raising interest rates and pulling back on credit. And that's all tied to their overall cap. So each, as it stands right now for this previous year of 2019, they could only do $35 billion each. So $35 billion for Fannie and $35 billion for Freddie. Now there are certain products that they could do above and beyond that, such as the Green Program or affordable housing. But their overall, they did way too much in the first couple quarters of their cap business. So they had to slow down, or otherwise they would run out of capital for the remainder of the year. And so that's where you saw them pull back significantly on credit, or say on an 80% LTV deal, you could get 2, 3, 4 or 5 years of IO. Now it's, if you're going to be at 80% leverage, it's maybe 1 year of IO, or maybe pull you back to 75 or 70% LTV. So it's been a challenging last 45 to 60 days.
So they really can't expand their cap. So that was the problem, is that they were trying to slow down lending so they wouldn't go over their cap business. And they couldn't turn a lot of this business into affordable or the Green Program. So they were afraid that they would just run out of money. And so that's why they were trying to slow things down. So they raised interest rates significantly, even though the 10-year Treasury, which is the index that Fannie Mae and Freddie Mac use in a lot of their 10 or 12-year loans, that was going down, but their profit spreads for Fannie Mae were going up. So they were not only just trying to tap the brakes, they were stepping on the brakes to stop lending as quickly as possible. And as Fritz said, they were trying to change underwriting of these transactions. So where we had done maybe pro formas, the borrowers did, that they were going to get 5 years of interest only. Well, that's not what they were going to get because they were trying to slow things down. They were trying to do a disincentivize to use Fannie Mae and Freddie Mac. And then there were other spaces that people could go to, whether it was bridge lending or CMBS type of stuff. So they really wanted to apply the brakes. So where did this all begin? Tell me a little bit, give me a little bit more background. There's a new regulator in place with Fannie Mae and Freddie Mac. And what type of an impact do you think that's going to have?
Yeah, so Fannie and Freddie are regulated by the FHFA, the Federal Housing Finance Organization. And ultimately they had a new leader in place, Mark Labrio, who started at the beginning part of 2019, who, as they've released more and more data on Fannie and Freddie, really they wanted to have them pull back their exposure in the marketplace. Fannie and Freddie going back to 2008 was taken over by the federal government and put into conservatorship. And I think overall FHFA and the Treasury Department released a document in August stating that they really want to pull them out of conservatorship and bring it back to the private markets and recapitalize them. And so there was a lot of indecision going into where the future of Fannie and Freddie will be, not just on the multifamily market, but the single family market as well. And so I think that also added some of the indecision and pullback from both Fannie and Freddie.
So tell me the good news. What happened last week?
Yeah, so on September 13th, FHFA released their new goals starting really fourth quarter 2019, where they can do, both Fannie and Freddie can do $100 billion total each, so a total of $200 billion, which is a lot. I think it's a lot more than we were expecting for an allocation for both of them, where, even in their total biggest years, the last, 2 or 3 years, they weren't even doing, 80 billion. So what they came out was $100 billion each for the next 5 quarters. So that's inclusive of Q4 2019. So they have really $80 billion allocated for all of next year, which is plenty of liquidity and allows them to continue on a pace of being a 40% to 50% of the overall marketplace.
So that breaks kind of the log jam that we had, not having indecision in the marketplace, that Fannie Mae and Freddie Mac were actually going to fund the loans. Now with this new initiative that's just come down from FHFA, that now there's plenty of money to fund these transactions. So it sounds like it's good news, Fritz, but is it good news? Is there a catch to it, or we just don't know what we don't know yet?
Yeah, I mean, I think there's, as we record this podcast, Fannie and Freddie haven't really came out with if they're going to change, how they're operating from a pricing standpoint as well as credit. So I think the big indecision is, yes, both of them have plenty of liquidity moving forward for the next 5 quarters, but are they really going to pull back on, reopen the credit and pull back on pricing so they can be more competitive across the marketplace? So at this point, we don't have any answers from either agency.
So we've kind of broken the log jam with money. So there'll be money to spend for people that want to buy apartment buildings to loan out, but we're not too sure exactly what that means for interest only, lower leverage, any of the pricing waivers, or waivers that come with just everyday business with Fannie and Freddie. So there are some underlying concerns. So hopefully we'll know something in the next 2, 3, 4 weeks when we get that information back out to everybody. JC, a question or two?
I think this is really big news from the standpoint that, as you guys know, right? I mean, we're definitely sort of in a mature point in the cycle, and there's a lot of unknowns in the market right now with some of the trade war headwinds and other things that are happening globally. And so I think that the really good news with this announcement is that we now at least see the next, 4 to 5 quarters worth of solid liquidity from at least 50% of the market for multifamily lending. And that's going to go a long ways to making people that are in the multifamily space, trading deals and buying deals and operating deals. It's going to make them feel a lot better about staying in the market for these next several quarters. So I think from a high level perspective, I think this is absolutely phenomenal news if you're in the multifamily space.
That's great. Anything else, Fritz, that you want to add to it?
No, I just think overall, I'll reiterate what JC just said. I think it's awesome news for the whole multifamily market. I think with this big pullback, I think all the uncertainty, it's been very challenging. I know for a lot of borrowers, multifamily borrowers, were, as they're buying deals to have this big of a credit pullback or pricing expand, it's very challenging. And so I think, Fannie and Freddie's goal moving forward, should be to support liquidity in the multifamily market. And I think with the $100 billion allocation for each of them, I think that gives them plenty of liquidity to continue to provide that consistent cash in the marketplace.
JC, you're an operator of multifamily properties. You're a syndicator. If people want to get more information about what you do, let them know what you do.
What we do? Well, we've been helping investors for the last 13 years through a full market cycle, which means we were doing this before the recession. We've been helping investors make smart multifamily investment decisions. And so if you're out there and you're wondering kind of where to start, you want to get into apartments, you want to be an investor, or you're just looking for some advice on multifamily, we are happy to provide a free 15-minute consultation to any listeners out there, any viewers out there. You can go to our website, multifamilypropertygroup.com. Go to multifamilypropertygroup.com. Go to the Contact Us section of our website and just request a 15-minute consultation. And one of our principals, including myself, will get a hold of you, and we will have a discussion with you on how we can be of service.
And then don't forget Old Capital, the National Conference for Old Capital, Multifamily Investment Conference on October 24th and 25th in Dallas, Texas. This is not just a regional conference, it's a national conference. We'll have some great speakers, get a chance to meet with JC, get a chance to meet with Fritz, meet the movers and shakers in the multifamily industry. You want to know these guys if you are thinking about getting into the multifamily business, or at least investing in the multifamily business. So again, go to oldcapitalpodcast.com and get your tickets to this great event. Fritz, thanks for the information. You did a great job. We appreciate it. We'll stay tuned for the next couple of weeks and see what else is coming on for changes in multifamily financing. And always a pleasure, JC. Thanks for putting it together.